This is what's happening to this market. You're about to hear about a story that is so absurdly cheap, and it doesn't matter. How much can great earnings matter when your stock is going out of style in the Wall Street fashion show? I'm talking about a terrific company, XPO Logistics. We've been on it since it came public. The freight transportation company that's in the process of breaking itself up because management feels it's not getting enough credit from the stock market. We just had GXO, their tremendous logistics business on last week. It's fantastic. In March, we learned XPO plans to sell its intermodal operations and its European business, then break the remaining company into two separate entities, a truck brokerage outlet and a North American less than truckload transportation unit. We typically love these breakup stocks. They're just fantastic. But right now, the market's terrified of a weakening freight market, so the stock has been clubbed. Tonight, though, XPO reported a magnificent quarter with better than expected results for every major line item. On top of that, management raised their full-year forecast. Going by the new guidance, the stock now sells for just 9 times earnings. And you've got a major catalyst in the horizon in the form of this impending breakup. Is that enough to get the market excited about a freight stock when the Fed is hitting the brakes in the economy? Let's take a closer look with Brad Jacobs. He's the chairman and CEO of XPO Logistics, a true moneymaker. Find out more about the quarter and what comes next. Mr. Jacobs, welcome back to Mad Money.
Great to see you, Jim.
Brad, I have to tell you, it is rather shattering to see your company sell for 9 times earnings with a breakup coming, a massive discount to the market, and, of course, to your peers. So can you try to explain? I know you're taking this action. You don't need to do it, but obviously you think it's time.
Well, first of all, it's great to be back on the show. Always love coming here. You're absolutely right. The first quarter, we smashed it. We had beats on revenue. We had beats on EBITDA, EPS, free cash flow. We had the highest revenue ever in the company. We had the highest first quarter EBITDA. We had the highest first quarter EPS. We delevered the balance sheet from 2.7 to 2.0. We're happy to keep delevering. And we raised EPS guidance for the year by 26%. So really, really great quarter. And the spin will accomplish 2 things. It'll make us make 2 companies, and they'll both be more focused and fit for purpose. And investors will be able to value them correctly. And as you said in the introduction, I don't think we'll be trading at 6 times EBITDA and 9 times earnings for a very long period of time.
Well, Brad, when you first put the company together, I loved Europe, the logistics best in show. Obviously, the LTL market, the less than truckload, is just you dominated, and that turned out to be vital for e-commerce. But I guess what Wall Street didn't get, that this was a great value creator, and they just had to silo your different businesses?
I don't know. I'm not complaining. For the last decade, we were the 7th best performing stock of the Fortune 500. So I'm not complaining. It was pretty good. However, I do think that we're not going to trade at 6 times EBITDA and 9 times earnings for a long period of time. It's certainly not after the spin. So after the spin, in my opinion, you're going to have a much larger universe of investors who want to invest in only an LTL asset-based company that's levered to the industrial economy, or they want to invest in a tech-enabled brokerage services business that's growing at 3 times what the market's growing at. And today, you don't have a natural universe of investors who want to invest in an LTL company and a truck brokerage company and a European transportation company. So I think we'll solve that.
Now, when I look at this business that you're spinning, which has got the truck brokerage, I mean, Uber's got this business. They have Uber Freight. This seems to be a far superior company in the sense it's being used right now by real companies to be able to figure out how to move freight around. It's actually the antidote to higher freight costs, isn't it?
Well, that's what we do. We're growing because of an outsourcing trend from shippers who raised the white flag during COVID and said, you handle this. And it's not just us, it's our competitors too, are taking share through the outsourcing trend. But we're taking share much, much faster than the market. We've been outperforming the market quarter after quarter, year after year. You look at the first quarter we just had, volume up 23% in truck brokerage, revenue up 38%. This is the 6th consecutive quarter we had volume growth more than 20%. So we have first mover advantage for technology in that business. Right. Mario Harik and I started the whole concept of a digital freight marketplace when I hired Mario in 2011, and that evolved into XPO Connect. And XPO Connect is when we interact with our customers electronically, digitally. In the first quarter, 74%, nearly 3/4 of our loads were either sourced or covered electronically. And here in April and May, that's gone even higher.
Well, let me ask you, Brad, because you figured a lot of this out. Are we still going to hear about supply chain issues over and over again, or are people going to realize that there are outfits that have figured it out? You just have to go with them.
Well, it depends where you are in the supply chain. I mean, for us, disruptions are actually a good thing because our services value that more. But from the economy as a whole, it's going to take a while, Jim, before these supply chain disruptions are normalized. I just saw Pat Gelsinger, from the CEO of Intel, last week saying that he thinks the shortage is going to go on to 2024. So you got a labor shortage. It's a little less severe than it's been recently. We've seen job applications go up, but it's still tough to get jobs, to get workers. And you've got part shortages, and you've got material shortages. You got the chip shortage. So these things are going to take a while to work out. It's not going to happen overnight.
But you're expanding your fleet by buying more tractors. You're doubling production at your in-house trailer manufacturing facility. I mean, you're doing everything you can to try to solve this. We
are doubling down and growing capacity. In the first phase, in the first 6 years that we owned LTL, done the LTL business starting in 2015, we really weren't trying to grow the top line. We weren't trying to take market share. We were trying to sweat the assets and run the business for significant cash. And that we did. We generated over $3 billion of net cash in phase one of LTL. Now in phase two, we're buying tractors. We're producing more trailers in Arkansas. We're adding doors. We're adding more capacity to our cross-dock facilities. We're doubling the capacity of our driver schools. So we're really going to grow the top line over the next several years. We're investing in long-term growth of that business. At the same time, going to grow margins.
Well, one last question. Do you think the people out there are listening saying, oh, my God, going into recession, this guy's coming on and he's talking about expanding? But isn't it the truth that, where you're making so much money doing this, and the economy is a little bit stronger than people realize? They need XPO Logistics to grow.
Recession. I mean, we have a return on capital in our business that's in the 38% range for the whole company. And our LTL business, where we're investing more, we're going to invest more, our return on capital is even higher. So it's fine to invest in that business, regardless of what's going on in the economy. Well, I remember when you bought it in Europe, during the height of the European debt crisis, and it turned out to be a genius move. So it's not like your timing can ever be questioned. Brad Jacobs, Chairman and CEO of XPO Logistics, a continual moneymaker who's kept every single promise since he started coming on the show a decade ago. Brad, thank you. Great to see you in person. Thank you. I like that moneymaker, Jim. That's a good sign. Well, you deserve it, man. You deserve it. Anyway, Man Money, but this is the kind of situation we're looking for. A self-help situation just like the GXO where money will be made. Man Money's back after the break.